Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Joyce, Managing Director with Nasdaq's Market Intelligence Desk, for an update on technical levels he is watching on the Nasdaq-100. And Brian, it seems like week to week we keep talking about the Nasdaq-100 hitting new all-time highs. And does this feel exhausted? Is it overextended? But alas, here we are. So let's take a look at your first chart today with the Nasdaq-100 with fresh levels at the NDX you're looking at.
Well, thanks for having me on, Jill. Yeah, the NDX, you could certainly argue that it's extended, but as we say, the technical parlance, overbought can certainly become more overbought. So certainly something you need to be careful of if you're looking for a place to, lock in gains or go short here. The market can continue to run, and clearly it has been. We're up 78% from those March lows, so just a phenomenal move. So again, today we're making new all-time highs in the NDX. We had the Fed come out today with some commentary. We're going to keep rates at zero bound for a long period of time. The yield curve is steepening. Technology month to date is again the top performing sector, up 10%. That makes up about 65% of the index, tech and communications. So again, it seems like every week we come on, the NDX is making new highs, and is certainly doing so again this week.
All right, Brian, if we take a look at our next chart here, the S&P 500 Tech Index, would you say that looks similar to the Nasdaq-100, which of course we review weekly?
It absolutely does. And so there we were just looking at the NDX here. I just flipped right now to the S&P 500 index, and as you can see, it's very, very similar, both up almost identical figures year to date. The NDX is up 37% year to date. The tech sector is up 35.9%, so about 1 percentage point apart. They look almost identical. What I think is very interesting and noteworthy, we've been talking a lot about breadth. Breadth, kind of comes and goes, it wanes, and then, rebounds. What we're seeing here now, this is a chart of the technology index, S&P 500 technology index, the equal weight version. It's actually the ETF for that index. And as you can see, it's only about 3% above the highs that it made back in February. So to me, this chart in general, whatever I would be looking at, I would say this looks like a very constructive chart because, as you can see, the high from back in January and February, almost identical. We retested it back in June and then again July and August. And just this past week, we were back at those January highs right here. We're just beginning now to emerge above that. And again, we're only 3% above those Feb highs. If you look at the weighted index for the NDX, it is 24% above those February highs. So this to me argues that, the other constituents of the index outside of the big mega cap names, which there's been a lot of talk about how much they've been the driver of performance, which is accurate. But what this tells me is that a lot more constituents underneath the hood of the surface are beginning to make their move. And we are seeing that amongst the breadth figures as well. The number of stocks making new highs just yesterday or the day before made a new high for the month of August. And previously previously throughout the month of August, as the index was making new highs in the NDX, the number of stocks making new 52-week highs was decreasing. That changed this week. Coincidentally, the equal weight index, or in this case, the ETF for the NDX, is beginning to break out from, I would call it an 8-month base. So that to me looks very constructive and argues that while many people seemingly are trying to call the top or, hey, we're due for a big pullback, I've said it a number of times myself, this to me looks to me like we're going to see an expanding constructive move in the breadth figures below the surface. So I kind of like how the way things are going. The summer months are typically weak performing months, going all the way back to 1950 on average. But this year, 2020, has proven to be quite a year. It's been, we had record decline in the first quarter. We had a record rebound. And what I would suspect is we're going to have a year where we're going to, again, be going against the grain. It looks to me, the way this chart is setting up is that the upside bullish momentum, we could actually start expanding the breadth and continue higher.
So Brian, when you talk about that, that would actually be positive for the market overall, just for the benefit of the audience, because there's been so much concern where there's a handful of 5 to 6 stocks that have been driving performance. But if it expands to the other, 93, 94 stocks in the Nasdaq 100, that could be a good thing because it shows wider participation, is what you're saying.
Absolutely. So this here specifically is looking at the technology sector. But
Mhm.
when we are speaking about the broader market, month to date, tech is again leading, but the other groups are doing well too. Communications is up 9%. Some people would call that technology, but discretionary is also up 9%. And the industrials, and that's the big one to me when we want to talk about the broader market, industrials is up 9% as well. And that Dow is really beginning to make its move well above its prior highs from 2 months ago, almost 3 months ago in early June. So we are absolutely seeing that rotation into other groups as well. And then again, more specifically, just the technology, we're seeing an expansion of breadth on the previously underperforming technology stocks.
All right, Brian, great stuff. Thanks for joining us on Trade Talks.
Thank you, Joe.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.